Crypto clarity is coming. For years, crypto has lived in the gray. No clear rules. No clear roadmap. Just lawsuits, headlines, and uncertainty. Projects launched. Exchanges grew. Investors piled in. But one big question never had a clear answer. Who's in charge? Now, one of the most powerful voices in Washington says change is coming. Crypto clarity is coming. And his name is Patrick McHenry. Today, we break down what this market structure bill could mean, why it matters more than most people realize, and how it could reshape the future of crypto in America. Because this isn't just another policy update. This could be the moment the fog starts to lift. Who is Patrick McHenry? Patrick McHenry is a U.S. congressman and former chair of the House Financial Services Committee. That committee oversees America's financial system. Banks. Markets. Regulators. And now, crypto. For years, the crypto industry has asked for one thing: clear rules. Not enforcement first. Not lawsuits first. Rules first. McHenry says that clarity is finally on the table. The problem: a regulatory gray zone. Here's the issue. Crypto doesn't fit neatly into old financial categories. Is it a security? Is it a commodity? Is it something entirely new? Right now, different regulators claim different authority. The Securities and Exchange Commission says many tokens are securities. The Commodity Futures Trading Commission says some are commodities. The result? Confusion. Exchanges don't know which rules apply. Projects don't know how to comply. Investors don't know who's protecting them. And uncertainty slows innovation. Crypto clarity is coming. Patrick McHenry has pushed for a market structure bill. A framework. A rulebook. A clear division of authority between regulators. His message is simple: America should lead in financial innovation, not push it offshore. Because when rules are unclear, companies leave. Talent leaves. Capital leaves. Clarity isn't about deregulation. It's about defining the lines. Who regulates what? How tokens are classified. What exchanges must do to comply. For the first time in years, lawmakers are talking structure instead of punishment. That's a big shift. Why market structure matters? Let's make this simple. Imagine playing a sport with no rulebook. No clear referee. No boundaries. Chaos. That's how many in crypto describe the current environment. A market structure bill would define digital asset categories, clarify oversight responsibilities, establish compliance pathways, protect investors while allowing innovation. It doesn't guarantee growth, but it removes ambiguity. And ambiguity is expensive. Markets hate uncertainty. The bigger stakes: this isn't just about crypto traders. This is about global competition. Other countries are moving. Some have already created clearer crypto frameworks. If the US delays too long, innovation could migrate. Patrick McHenry has warned about this. He argues America should not fall behind in blockchain technology. Because financial infrastructure is strategic. It's not just about tokens. It's about the future of payments. The future of settlement systems. The future of digital ownership. The industry's reaction: crypto companies have long asked for this moment. They don't necessarily want fewer rules. They want understandable rules. Compliance is possible. Uncertainty is paralyzing. Many exchanges say they're willing to register. But they need a pathway. Developers say they want to innovate legally. But they need clarity on classification. If this bill passes in meaningful form, it could unlock capital, reduce legal risk, and bring stability to an industry that's lived in constant tension. The political reality now. Let's be realistic. Legislation takes time. Politics is messy. Debates will happen. Amendments will be added. Nothing moves overnight in Washington. But the fact that serious market structure discussions are happening is significant. For years, crypto policy was reactive. Now it's becoming proactive. That shift alone changes the tone. What it could mean for investors if regulatory clarity improves: institutions may feel more comfortable allocating capital. Traditional finance firms may expand digital asset offerings. Public companies may engage more confidently. Markets thrive on predictability. Clear oversight can reduce headline risk. That doesn't mean prices immediately skyrocket. But it changes the foundation. And strong foundations matter. The critic's perspective: not everyone agrees. Some argue more regulation could slow innovation. Others fear overreach. There's concern about how tokens will be classified, how decentralized projects will be treated, and whether rules will be flexible enough to adapt. These debates are real, and they matter. But uncertainty forever is not a solution. Structure, if done well, can balance protection and growth. The cinematic turning point: for years, crypto has operated like a frontier town. Fast growth, high risk, minimal oversight. Now, Washington is drafting a map, drawing boundaries, defining jurisdiction. Patrick McHenry's message signals something bigger than one bill. It signals recognition. Recognition that crypto isn't disappearing. Recognition that it needs a framework. Recognition that clarity beats chaos. That's a pivotal moment. The broader impact on Bitcoin and crypto: when regulatory fog lifts, markets react. Not always instantly, but structurally. Clearer laws can reduce enforcement surprises, encourage institutional participation, improve investor confidence. It transforms crypto from experimental to structured, from fringe to integrated. And that transition changes perception. Perception drives capital. Capital drives growth. Strong cinematic conclusion: for years, crypto asked one question: what are the rules? Now, a powerful voice in Congress says, the rules are coming. Patrick McHenry's push for market structure legislation could mark a turning point. Not hype. Not speculation. Structure. Clarity doesn't guarantee success, but it removes excuses. It replaces fog with definition. And in financial markets, definition is powerful. The future of crypto in America may not depend on price charts alone. It may depend on policy, on clarity, whether lawmakers can build a framework that balances innovation and protection. The frontier phase may be ending, and a structured era may be beginning. The question now isn't whether crypto survives. It's how it evolves. And if clarity truly comes, the next chapter could look very different from the last.